Hi guys. Today we will analyze Scott's Miracle-Gro stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Support levels are around $111 and $103. Next support levels are around $91.50 and $79. Resistance levels are around $120 and $131. Next resistance levels are around $144 and $166. In the last month the stock has been trading between $113 and $133.50 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 0.5 million. This is not a very liquid stock. The stock has been in a downward trend since April 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 14% per year, for last 5 years. We see that the average profit margin of the stock has been around 9% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 115% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Scott's Miracle-Gro Company: bad, average, and good. First scenario. Scott's will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 3%. Future profit margin would be low, 7%. Future free cash flow to net income rate would be low, 50%. In this case, the fair value of the stock today would be $67. Second scenario. Scott's will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 8%. Future free cash flow to net income rate would be average, 60%. In this case, the fair value of the stock today would be $93. Third scenario. Scott's will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 5%. Future profit margin would be high, 9%. Future free cash flow to net income rate would be high, 70%. In this case, the fair value of the stock today would be $125. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 7.72. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Scott's Miracle-Gro, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 14. Again, I will use 3 different scenarios for Scott's company: bad, average, and good. First scenario. Scott's will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future P/E would be low, 14. In this case, the fair value of the stock today would be $60. Second scenario. Scott's will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 16. In this case, the fair value of the stock today would be $75. Third scenario. Scott's will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 18. In this case, the fair value of the stock today would be $91. As you can see, today the stock is overvalued, $113, even if we expect the company's high performance in future. The company has a high debt level, and their free cash flow is really low. And the stock is expected to show a very small growth in the next 5 years, 5% per year. It's a risky combination. Based on that, the stock looks overpriced at the moment. The stock has been in a downward trend since April 2021. The stock seems too risky. If a company doesn't have enough cash, it's a red flag for me. In my opinion, the stock's fair price is between $80 and $100 in the current environment. Company's strengths. Scott's Miracle-Gro is a leading international supplier of products for the consumer lawn and garden, and professional turf and horticulture markets. The company's 3 largest customers are Home Depot, Lowe's, and Walmart. The company is the exclusive agent of the Monsanto Company for the marketing and distribution of certain of Monsanto's consumer products within the U.S. and other countries, including China and Latin America. U.S. household formation growth will drive demand for gardening products. As the market leader in consumer gardening products, Scott's will benefit from the secular housing trend. Consumer behavior has changed as a result of COVID-19, with more consumers engaging in gardening as an activity. As the largest player in the consumer gardening market, Scott's will benefit from this change. The emerging cannabis industry represents a lucrative opportunity for Scott's, which is well positioned to capture this segment of the market. The company's return on equity of 53% is amongst the best returns of the industry. Its return on assets of 8% is better than the industry average of 5%. Its profit margin of 9% is amongst the best of the industry. Risks. The company faces risk from the seasonality of its business, and its dependency on favorable weather conditions. There is risk in the company's premium pricing, which may face headwinds in a challenging economy, as consumers search for more affordable products. Scott's is subject to market risk and fluctuating prices of fertilizer inputs, including urea, resins, diesel and gasoline, natural gas, sphagnum peat, bark and grass seed. The stock performance is tightly correlated with headlines related to cannabis reform. Also, the cannabis oversupply continues to weigh on the company's results. The cannabis industry has been subject to cyclicality, with periods of rapid volume growth, followed by slowdowns. The shift to an online marketplace may erode Scott's market share, and damage its ability to charge a premium for its products. Scott's Hawthorne segment will not be able to generate long-term operating margin expansion, as its cannabis growing equipment will not command sustainable pricing power. Scott's acquisition of hydroponics producers will be value destructive, if the cannabis industry does not expand as anticipated because of regulatory constraints. High debt level. The company's net debt-to-equity ratio, 380%, is considered high. The company requires more financing than its industry peers. Its debt is bringing too much risk. The stock is down more than 50% from its all-time high, due to lower cannabis-related growth expectations, as well as pressure on housing and consumers. The revenue is expected to grow only by 4 to 5% on average over the next 5 years. The earnings per share is expected to grow only by 6% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.